It's about that time of day again. My name is Joseph. It's Tuesday evening, January 7th, 2017. Welcome back to your nightly newsletter. We've got crude, S&P, gold, euro, and FDAX in tonight's newsletter video. Crude is bearish and trying to finish a move down to January's low, but we just saw the API report come out a few moments ago, which is giving us some important levels of support and resistance ahead of tomorrow's session. The S&P is bearish and trying to retest yesterday's lows, but the chart pattern we see tonight tells us this may be easier said than done, and it may just backfire in the face of the bears. The gold is bullish, but a measured move and a short-term channel are telling us to resist the temptation to chase this move higher because another pullback may be right around the corner. The euro is bearish and trying to retest the low, but there's one obvious support level standing in their way. They got to crack that support before they finish the job tomorrow. And the FDAX is bullish, trying to retest the high, but a key resistance level overhead is staring us right in the face, telling us we better not try to chase this move higher. Boy, I have a great newsletter for you guys and gals tonight. We've got a couple great charts, a couple new learning opportunities tonight on the newsletter. Before I put the plan together for tomorrow's session, I do want to remind you, though, the only place to watch the full-length version of this video is on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of that YouTube video. Follow that link. Come to the blog at Sideways Markets and watch the full-length version with all the analysis. While you're here, don't forget, join the mailing list. I'll send you an email every evening when this nightly newsletter video is ready to go live. Follow me on social. I'm always posting important updates, news events, charts, and links on my social media channels in the lower left-hand corner. Grab those charts. How easy is this? Every chart you see me using in tonight's video, you can download those charts and have them ready for your computer and your trading session tomorrow. Follow that link below the video on the blog. And please don't forget to grab your free pass. You're going to learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. If you're not a member here at School of Trade, I got a free pass for you guys in the upper right-hand corner. And if you're brand new here to the SOT, a big warm welcome to all the newbies out there. Check out the frequently asked questions, and don't forget to hit me up. I'm always here to help you guys get the who, what, where, when, and why. Hope you guys had a great week with us so far. Fantastic day today. Didn't get much of a pullback. We're hoping on crude, but another big move lower here. Another exciting day comes to an end. We got a big opportunity setting up for tomorrow. Tomorrow's hump day. Let's jump right into it at the calendar here for tomorrow. Tomorrow is, of course, the 8th day of February. We got the Wednesday hump day edition. No major news on the calendar here tonight coming in the overnight session. So we've got clear for liftoff here tomorrow. We've got some relatively minor news from the RBI, the Reserve Bank of India, at 4 a.m. tomorrow. We got housing starts from Canada at 8:15. But really the big meat and potatoes tomorrow for pretty much everybody, I guess. No real major news for tomorrow except for that petroleum status report. The inventory report, it'll affect crude oil, it'll affect the S&P 500 tomorrow. Of course, the S&P being crude oil's shadow this year. Tough to tell how big of a reaction you'll see on the S&P, but we definitely expect to see a little bit of jitters tomorrow morning on the S&P around that 10:30 a.m. Eastern time. So don't forget, tomorrow morning, 10:30 a.m., the petroleum status report. I like to give that a 15-minute buffer. 15 minutes before, 15 minutes after. Be very careful within that 10:15 to 10:45. It'll be very slow leading up to the news and be very fast and volatile right after the news comes out. I also want to remind you that anytime we have the inventory report, the night before we get the API inventories, right? The American Petroleum Institute every Tuesday evening gives us their 4:30 p.m. API number, and we use that to project some important support and resistance levels for the following day. We're going to dig into that in just a moment. So really the only major news tomorrow is that petroleum status report, and it really only affects crude, and a little bit of a tail end of it will affect the S&P 500, so be aware of that. And don't forget, we'll be attacking this news announcement tomorrow with all of our advanced members in the trade room. Come out and join me. We open up at 8 o'clock Eastern time for all advanced membership. All right, let's keep going here. We got crude, S&P, gold, euro, and we'll wrap up here with some FDAX. Now, we just came out of the API report tonight at 4:30 p.m. Eastern time. Look below the video in the text below the video. Click on through it, and you'll see I'm going to list all the API levels for you guys in the text below this video tonight. So make sure you follow all the way down to the commentary, right? And you'll see all the text there for the API levels for tomorrow. Let's get going. Crude is bearish and trying to finish a move down to last month's low. That's January's low at 51.48. How quickly this price turns. But we're trading below the bear spike and channel, which tells the sellers to avoid chasing this move and look for selling opportunities up off the lows using traps and failures tomorrow. One thing to keep in mind, actually two things to keep in mind. First of all, one, this is a very, very strong move lower. We may not see a full rotation back to the high of that channel. It is a break and retest, so we may only get a small trap high. The second thing you want to keep in mind is the inventories tomorrow at 10:30 a.m. Eastern time, which means we're watching those API levels, and oftentimes we see a big correction ahead of this major news. So buyers, definitely be watching to see if you can get some strength coming off these lows, and possibly if we can get some strength, right, we may have a short-term bull market, right, tomorrow ahead of the AP or ahead of the DOE number tomorrow morning at 10:30 a.m. So as you can see here, just a really good example. Second day in a row now here on crude oil, where they came out on Sunday night and just blitzed this thing lower here. Monday was a down day. Tuesday was a down day. I mean, we were expecting to see a little bit more of a pop than that, but hey, what do I care? By the time I came in this morning, this market was roaring lower, and it was very, very easy to see that the sellers wanted a little bit more than we thought, right, they wanted yesterday. So it was pretty easy to be a seller today on crude oil. I think everybody pretty much had picked up on that as of 8 a.m. Eastern time. We have a bear channel. That bear channel got a break and two legs down, and that turned into a larger, what I would look at as a bear spike in channel. We just came out of the API number as price was up at the high, and the API inventory number sent prices tumbling all the way back down to that low. Couple important things here now. With that spike in channel, we get our correction zone up around that 52.34. We get the battle zone up around that 52.65. At this point, though, that looks a bit like a pipe dream here to think that we're going to go all the way back up, right, and then come back down. One big thing here is this strong move lower. Anytime we see that amount of strength, we know, first of all, don't chase after it, right? We're at the low of this channel. You know, like I always say, in a bear market, where's the most reliable trade going to be? At resistance, and when there's enough room for a good, juicy target, right? Because we want to benefit from that self-fulfilling prophecy that is technical analysis, right? So if we just try to sell right here, right, into this low, if we try selling into this low here, there isn't likely going to be a whole lot more profit potential, and so there aren't going to be as many sellers involved as we would like to participate. So we'd like to get this price up off this low to allow us so we can sell without selling directly at the low of this range, or of course into that prior month low. We have to assume that 51.48 is going to be the objective. What we would love to see here right now is get up, resistance, right, and back down, right? Get up and then back down. With this much strength going lower, I'm looking at really any of these resistance areas try to get me in. I'm not expecting this market to want to go all the way back up to the high of that channel. Now, with that said, tomorrow's an inventory day. And a lot of times, of course, we won't know this till we get there tomorrow, but a lot of times what happens is you'll see the market kind of run higher. It would make sense, profit taking from the sellers, right? Short covering rally, hold the pullback, and we may see this market in kind of a bull trending environment here for the first half of tomorrow, just to get that price nice and high so bears can start selling into it and then run this price right back down again. So there is a possibility for that, but we are going to see a lot of, the only way that we can think that's going to be the case is if we see the buyers show us some strength, hold a pullback above the moving average, and show us that they really want this price going higher. So sellers basically have to give up on it, and the buyers have to now, right, take it higher. So again, at the low of a bear channel. I'm not expecting there to be a lot of sellers interested at these lows. So what if price goes higher? What if price goes lower? If the price goes higher, I've got my eyes on the moving average. I have my eyes on this prior swing low. These will obviously be areas where we can look for trap high and back down. We can look for failures and back down, right? Basically, once we get back to an area of resistance in the chart, that may not be the high of that channel, right? Short-term resistance levels that we'll find on our intraday charts tomorrow morning with all of our students in the trade room. Again, I'm going to be looking for those buyer failures, right, to bring that price down. A lot of times you see this much strength to the downside. It's just the sellers aren't going to let it go up back to the high of that channel. Obviously, selling up around these highs would definitely be, right, the cat's pajamas tomorrow, right? That would definitely be where we'd love to be selling, and that's likely where we're going to get the most sellers tomorrow. But again, don't be surprised, though, if this market makes it back above the moving average on strength, holds the pullback, and then tomorrow we may be spending the first half of the session, right, in a bull market until we get that kind of craziness around the news and then run this price right back down again. The moral of the story, we're clearly bearish. It's a very strong bear market going lower. I would recommend resisting the temptation to chase after this move unless you're willing to take some serious heat against your position, because the rest of the market out there will likely be watching resistance areas overhead, trying to get this market up so we can sell it back down to avoid selling right into those lows. If we do see the price run in the overnight session down to that prior month low, this market feels like there's a cinder block tied to it and tossed in the ocean. It feels very, very heavy right now. And so if it does end up running down to that prior day low, the way we always play this is, right, look for that little trap high, incorporate that API level, right, and look to sell there. So if we do end up, the bottom line right now is your best friend, if you're a seller right now, are traps and failures. Traps come above prior swing highs, failures above the moving average. Just don't chase and sell low, right? Just don't chase and sell low. Try to get that proof of price going lower, but then get it up, failure, trap, right, and bring it back down. And again, don't be surprised here if we see some strength coming on the back of profit taking from the bears, hold the pullback, and we may have, right, a short-term bull market going higher here into these API levels, into the correction zone, into the battle zone, right, before this market comes back down. So I really want to see what happens in the first few hours of tomorrow's session. If we see the sellers walk away from it and the buyers take it higher, we will gladly be short-term buyers tomorrow because there's plenty of room going back up, but the buyers have to take control first. Also, too, don't forget, I've got a bunch of these API levels for you guys, right? 51.70, of course, being the most recent, 51.15, and 50.60. So these are going to be levels of support waiting for us tomorrow as longer-term targets. Of course, that prior month low at 51.48, right, will be the short-term milestone. Again, I'll put all of these levels in the contact, right, in the text below the video, that we've got those as a reference point, right, for tomorrow's session. Let's keep going here. How about some S&P? See, there you go again. The S&P acting as cruise shadow right now. The sympathy move lower here tonight on the S&P 500 as well. So the S&P is obviously bearish, but trading at the low of a triangle isn't the most reliable area to start selling, which tells us to look for selling opportunities up in the battle zone around the high of that triangle, and beware selling into this multi-day low unless we see a successful breakout pullback. What a great example, right? We talked about this in last night's newsletter. I gave you guys that sell zone overhead. We talked about this last night. Don't buy that low, right? We were expecting that price to go up and then come back down. And so now we're trying to return right back to yesterday's low and make that retest. Here's the problem. We have a rising support trend line. This looks like a triangle, but the more I look at it, the more you'll notice, right, we're not rotating all the way to the high, right? So really, for the most part, look at this as a resistance trend line. Look at this as a support trend line, and we now have to find a way to sell without selling into support. As I always remind you, in a bear market, where's the most reliable selling opportunity? At an area of resistance where there's enough room to entice all the other sellers in. So as you can see, if we go lower right now, it's going to be really difficult to have enough room to get everybody involved, right? If we go higher right now, now we're talking. Up in the battle zone, up now at an area of resistance.